Hello everybody, my name is Christian Charlo. Welcome to this market report. Today we're Wednesday, November 19, 2014. Today folks, I want to talk to you about a bearish movement among the steel sector. The major news that we had today in the steel sector is that Cliffs Natural Resources that you see here on the graph, this company announced today that they will shut down one of their mines in Quebec. The fundamentals of the steel sector are totally bearish. What we have in the steel sector is an oversupply and not enough demand from China. So those fundamentals, though, we believe that steel stocks that are today breaking down are actually great short opportunities and could actually continue their downward momentum. So today I'm going to show you the best picks, and on marketgurus.tv I'm going to share with you those two stocks that we believe offer the best downside potential. So let's start. First of all, if we take a look at the sector here, the sector is actually starting a clear breakdown. One ETF that allows you to trade that is the ETF, which is called SLX on New York. But we believe it's better to trade that bearish momentum via stocks. For instance, two stocks that we really like is a stock like LABRADOR iron ore on the TSX. And why we like that stock? It's simply because the stock has stabilized enough and now it's clearly breaking down. And the theory is the longer we stay within a sideways formation, the better is the technical signal that's come out of it. So this breakdown here is definitely a breakdown that we can actually believe in, especially by looking at the stochastics, which is showing us that there is still some room to go before we reach the oversold situation. However, on LABRADOR iron ore, because to get out of it, we would have to get out on the break of that resistance at 20 bucks. But from that price, 18 bucks to 20 bucks, that's a 10% loss potential. So we don't want that. We want to actually minimize our loss potential. And this is where on LABRADOR iron ore, we actually have put our buyback order closer to the price that we actually recommended that stock as a short. So our buyback order is, if ever the stock goes higher than that former support of the last few days, so around 1875, it's the point where you should actually close that short position. Elsewhere, we have United States Steel on New York. That stock we believe has the potential to reach at least 31 bucks. Our exit point is going to be around 36 because at $36, this is where the stock will reverse this downward trend there. So $36 exit point, target to first take some profit around 31 bucks, which corresponds to a point where usually we actually had a technical rebound on United States Steel. So those are our two picks on marketgurus.tv that you can have access for free 14 days just by clicking at the link below. Since this morning, we have talked about these stocks, and today, those are the best ones that we've recommended to our customers on marketgurus.tv. There are also several stocks that are breaking down, but those ones I'm going to show you right now are not offering a 10% potential on the downside. For instance, there's RELIANCE Steel, a clear breakdown, yes, a clear downward trend. The stock is actually, but it's slightly, there's not much room to go before we reach the oversold situation. And also, the stock could stop around 61. So 61, is it really worth it for RELIANCE Steel? Not so much. Also, if we take a look at this here, we see that this corresponds to a downward corridor. And at 61, it's really highly likely that we might actually have a rebound on RELIANCE Steel. So it's a short opportunity, but at 61, this is where I see a target on a stock like that. Worthington Industries, clear short opportunity. The stock could head toward 34 bucks. That could be interesting too on that stock, but it's just that we didn't really like the fact that there's not much room to go before we reach the oversold situation on Worthington Industries. So it's all about a matter of potential and the momentum indicators why we didn't choose Worthington Industries or RELIANCE Steel among our analyst choice portfolio on marketgurus.tv that you can have access for free for 10 days. There are also other big caps that are breaking down, and among them there's Rio Tinto, which is a nice short opportunity, and there's also BHP Billiton. So those of you who feel more comfortable to short those stocks, it's okay. We are not recommending those stocks among our analyst choice portfolio, but there's still nice short opportunity. And there's also that stock here, Tenaris, which is a clear breakdown. However, it's almost reaching the low of this important downward corridor. So Tenaris so far for us is not in a nice technical pattern to be shorted today, especially because there's a risk that it might rebound within this downward trend. Elsewhere, there's AK Steel. If the downward momentum continues, that stock will be next on the list to be shorted. And when should you short that stock? If it goes below that former support. So below 589 it's going to be a great short opportunity on AK Steel holding. So far, it's testing its support dangerously and could start a breakdown. So the steel sector, this is a sector that today is the best sector to short. Several stocks a shortable opportunity, but our best picks on marketgurus.tv are the two following ones: Labrador Iron Ore and United States Steel. They are all highlighted with an S, and AK Steel holding is the one to be watched. Make sure that on Labrador Iron Ore that your buyback point is around 1875, just to minimize the loss potential, just in case we do have a rebound on the markets. Because if we take a look at the market situation, we do not have yet a clear bearish cycle in the market. What we do have today, it's a simple correction after the FOMC announcement, FOMC minutes release, where the Fed said that they are focused on actually hiking interest rate next year, despite the gloomy economic outlook elsewhere around the world, and despite the low inflation numbers elsewhere around the world. So because of those reasons, though, because we have the S&P 500 that is just neutral, we actually recommend that those of you who are shorting the steel stocks today, that you will go in gradually. Do not be on a shorting spree, but go in gradually. And whenever we have the markets that are starting a clear bearish cycle, you might increase your short exposure and actually open full positions. So that's it, folks. This was Christian Charlo from marketgurus.tv. Facebook, Twitter, you can chat with us. You can also share our strategies. And never forget, folks, that the more money you make, the happier we are. See you next week.